Namaskar. What do you think would happen to an economy if money ceases to exist for a week? How would you imagine an economy without banks? Where will you save your money? From where will you borrow loans? What do you think? What makes central banks like RBI so powerful? And why every nation needs one? What do you think will happen to the economy if money is not flowing? How will you exchange goods? Namaskar. Today's session is about a course MEC 110 Money, Financial Institutions and Markets. We have tried to address all these questions and more in this course. It is a compulsory course of MA Economics MAEC program. MAEC program is structured around 4 semesters. In first 3 semesters, 3 courses are offered in each semester in multiple of 6 or 8 credits. This particular course, Money, Financial Institutions and Markets, is offered in 3rd semester. Now, in 2nd semester and 1st semester, you have already studied a course on macroeconomics, MEC 102. There we have talked about monetary economics. There also we have talked about importance of central bank. However, there we have not tried to explain its relationship with financial institutions and markets. In this particular course, we have tried to identify the relationship between money supply, financial institutions, markets, exchange markets, foreign exchange, and how it all works. We have also tried to address how different institutions like central bank, commercial banks, government interact with each other to try and identify various aspects of the economy. For example, if you want to decide which stock to invest in, what will you see? Will you see if a company is making profits, or will you look into its stock prices? How will you take that decision? We have tried to address such questions also when we discuss about financial markets, foreign exchange, and different future and option markets as well. As you might have seen the course, it is structured around 7 blocks. And in each block, we have tried to deal with a different aspect of economy, of financial markets, and the whole financial system. Today's session is about introduction to all these units, all these blocks, the whole course, so that in follow-up programs, follow-up sessions, we can discuss more about the technical aspects of it. In our first block, it is an overview block. We are giving an overview of financial system. Now, as a student, you must be thinking that it is something technical that you have to study, you have to read, learn. But let me break this to you. You are already part of a financial system. The moment you swipe your credit card, the moment you take a loan, you are already part of the financial system. So here in this block, we have tried to give you an overview of the whole financial system with the help of 3 units. The first unit being economic agents. Now we have tried to discuss what are economic agents. Simply put, if you see any businessman on the road, a vendor selling something, a buyer buying something, an investor into investing something, you have already seen economic agents. Yes, all these and more are economic agents. Now, how they deal with each other, how they interact with each other, how money exchange hands, how surplus of one investor is channelized into investment for the other. This is all what we have dealt in this introductory unit. We have also talked about 4 important constituents of financial systems. The constituents being financial markets, financial intermediaries. Now, what is a financial market? Financial market is a place where financial transactions are taking place. Be it taking loan, be it investing in stock market, and so on. Financial intermediaries are the people who are enabling this exchange. Financial intermediaries can be further categorized into two broad categories: banking financial intermediaries and non-bank financial intermediaries. So, agents, etc., who do not belong to a bank are part of non-banking financial intermediaries. By going through this unit, you will have an understanding about how system works in a very general and comprehensive way. As we move further, we will go into detail of these different aspects. Like we have a dedicated unit which is going to discuss about non-banking financial intermediaries. We have a particular block which is going to talk about central bank, RBI, its functions, its roles, etc. We will come to this as we move across the introduction. Now, after that, in our unit 2, after having an overview of the financial system, we will in detail talk about different financial intermediaries and the role they play in financial system. Basically, the role of a financial intermediary is to enable that exchange from a person who has surplus money into the person who needs money. Have you ever given it a thought what happens to the money that you save in a bank? Where does it go? How it is used? How do you get the interest? We have discussed about all these basic aspects in this unit 2. Now, as a student of economics and as a student who is studying financial institutions and markets, it is also very important to have a basic idea of accounting practices, different formats which are used for managing accounts. So our third unit is about basic business accounting. Here we have tried to give you an idea of how financial statements look, what is a balance sheet, how balance sheets work. You might have an idea about it from your previous classes, from your previous courses, but here we have tried to give you an overview in the light of financial institutions and market and money, of course. So the perspective also followed throughout in this course is macro. In a way, you can say that it is an extension of macroeconomics course that you have already studied in semester 1, that is MEC 102, macroeconomic analysis. But the approach is different. Here we have tried to move from theory into practical. There we discussed about the concepts, the theories. Now in this particular course, our perspective is also from our own country, from India. So whenever we are talking about central bank, we have discussed different functions of central bank, different features of it, but we have also given context of Reserve Bank of India, which is central bank of our country. So that summarizes the block 1. In block 2, we have discussed about different aspects of money, like what are the functions of money, how they exchange hand, what are the different measures of money supply like M1, M2, M3, M4. Again, as I said, this is something you might have studied in your previous course also. But here we have tried to link it to financial institutions and market as well. Our unit number 5 is on demand for money. Here we have extended what you already know about money demand and its functions. We have talked about different aspects of money demand like transaction money demand, precautionary money demand, and speculative demand for money. In our next unit, we have tried to talk about money supply, as in how RBI decides money supply. What are the different concepts related to money supply? Do you know what is high-powered money? Do you know how high-powered money is converted into money supply? There comes the role of money multiplier. We have also discussed about what is money multiplier and how whatever money that is pumped in by RBI becomes so huge to become money supply. We have also very briefly talked about role of RBI in money supply in this particular unit. because our third block is completely dedicated to central bank of the country, where we have talked about monetary policy. In our unit 7, we have talked about central bank and its role in monetary policy. Do you know that every central bank for every country, they have a very, they have to play a balancing act between regulating economic growth, maintaining economic growth, and regulating inflation. They have to make sure that inflation doesn't increase too much. They have to target it. Alongside, they also have to see that growth of the country is not stopped, reduced, or constrained because of the policies. So whatever policies they identify, they devise, it is made after discussion among Monetary Policy Committee. Now here in this particular unit, in this particular course, we have given you a very brief overview of different tools of monetary policy. The reason is that you have already studied it in MEC 102, which is macroeconomic policy. In case you find any difficulty in the tools of monetary policy, you can refer back to that particular course. Now in Unit 8, we have specifically talked about role of central bank as a regulator of the banking system. Now, initially I asked you a question, why is central bank so important and why it is necessary for every nation to have it? What is the role that they are playing? So in this particular unit, we have discussed the role of RBI, the role of central bank as a regulator of the banking system. And like I mentioned earlier also, our focus since is in India, we have majorly talked about different roles played by Reserve Bank of India, which is a central bank of our country. We have tried to discuss some of the monetary policy aspects of RBI also. The data that we have used is till 2024. Here I also want to mention that in case you're studying this course and you're interested in knowing the latest data, everything about RBI is available on their official website. It is always a good idea to go back to the website, to read it through, and it will give you a more understanding about the role of Reserve Bank of India. Now in Unit 9, after we have discussed about the role of RBI as a regulatory mechanism, now we have discussed about how monetary policy in India is playing a transmission mechanism role. As you all know that different tools of monetary policy like cash reserve ratio, statutory liquidity ratio, bank rate, reverse repo rate, they are different tools that help to decide, help to regulate money supply in the economy. So in this particular unit, we are also going to discuss more about these tools and how they control the money supply. What is the transmission mechanism? We have also tried to discuss the latest monetary policy with you. Like I mentioned, if you want to see the latest monetary policy, say of 2025 or maybe later, you can always visit website of RBI. We have tried to give you references as and when where it is required. Now, after giving you an understanding about how financial system works, what is money supply, how is demand for money important, and a very important institution, RBI, we have also discussed about that. In block 4, we talk about financial markets specifically. When I say financial markets, I mean money market, capital market, bond market, derivatives, etc. Often you think that how should you invest in the stock market, how much should be invested, what are bonds, are they safe or not? So in this particular block, we have tried to address all these questions. We have tried to explain how pricing is done, how bonds are important, how bonds are valued, how you can decide which bond to invest in, how much to invest in. Again, both from a theoretical point of view as well as practical point of view. So money market is for present time when you want to invest. Capital market is a long-term market. So here in this particular block of financial market, you will get an overview of different aspects related to investment, related to market, etc. Now, once we have given you an idea of financial markets, how they work, etc., we have discussed about financial institutions in our block 5. What are different financial institutions? One being commercial banks, the other being non-banking financial intermediaries, which are so many. When we talk about financial market, a major regulator that is very important to understand, is very important to study, is SEBI, that is Securities and Exchange Board of India. We have dedicated a unit to it, which means that we are going to discuss about what are the objectives, functions, and how they regulate different markets. Now, coming back to unit 14, which is about commercial banks. Here we have not only talked about different functions of commercial bank and the role they play and how they interact with the central bank to regulate the money supply, we have also tried to understand how they are related to the whole financial system. What are the interactions between commercial bank and different non-banking financial institutions, how everyone works in consonance with each other. That's what is the perspective of commercial banks unit. Then non-bank financial institutions like NABARD, SIDBI, we have tried to collate and discuss different functions of different non-banking financial institutions as well. This particular unit will give you an overview of all the institutions besides commercial banks that are involved in financial markets and are facilitating the whole financial system. So it is going to be a very informative unit for all of you. Nextly, we have talked about SEBI and other financial institutions and regulations. So we have to understand that SEBI is a very important, Securities Exchange Board of India is very important in regulating stock market, in regulating different companies and making sure that everything is going as per the rules, as per the regulations. There are other institutions also that, regulate different bodies. So we have institutions that control housing investment. We have institutions for mutual funds also. So we have tried to discuss all these financial institutions and regulations in Unit 17. Now, after giving you an overview of the financial system, all the economic agents, all the financial players, the regulatory bodies, now we come to operational aspects of financial markets that we have covered in block 6. It is a very essential block. In this whole block, we have tried to relate theory to practice. We have tried to address all those questions that I was asking initially. How much to invest? How to frame a portfolio? How to decide which investments are best, etc. So in that course, our Unit 18 is Efficient Portfolio Frontier. Now this particular unit, Efficient Portfolio Frontier, use Markowitz's model to identify what is portfolio and what is the right combination of portfolio. So, whenever you are making any investment decision, there are two aspects that you must see. This unit deals with that only, how to make a decision if you want to invest or not. What are those two aspects? One is risk and the other one is return. As you all know that they are higher the risk, higher is the chances of returns and higher the chances of profits. But how much risk is the right risk? How much return should you expect? What is the expected return of the investment? This is all what we have discussed in this particular block, as I mentioned, using Markowitz's model. So Efficient Portfolio Frontier, it helps you in identifying right portfolios, less efficient portfolios, over efficient portfolios, and exactly equilibrium portfolios. So what is a portfolio? Well, portfolio is a collection of different investments that you make. So for example, if you're buying shares of different companies, that will constitute a portfolio. Often they say that don't keep all your eggs in one basket. So that goes with a portfolio. Often you are expected to invest to keep some of your funds in highly risky assets that you can do. Along with that, some of the assets must be kept in low risk investment models. Of course, it depends upon various other factors also, like how risk averse you are. Do you love to take risk, or do you want to averse risk, etc. So this particular unit talks about all these portfolios. Next is a very famous model, capital asset pricing model. It's a very important model for financial markets. It helps you again to identify the relationship between risk and returns. Next unit is arbitrage pricing theory. It is an advanced version of CAPM model, which is capital asset pricing model. Now in this whole block, you will see that different theories are discussed and how these theories can be applied when you want to take a right decision. So it is a very important block. In this block, we have a unit on pricing of derivatives, which is very interesting, as in how derivatives are priced, how prices are fixed for derivatives, and how you should ensure that whatever you are investing gives you good results. Now in unit 22, which is on corporate finance, here in this particular unit, we have tried to see how a firm takes a decision. Till now, we were discussing about theoretical aspects, the financial market as a whole. Now we are taking how firms take decisions, how they decide how much to invest, how they manage their records, etc. This unit will give you a complete overview of corporate finance, which is otherwise a very huge subject. But being an economic student, being a student of money, financial institutions and markets, it is very important for you to have an idea of corporate finance. Last unit in this block, unit 23, is about foreign direct investment and foreign portfolio investment. So here we have talked about how they are different from each other. What are they? What will happen if suddenly, say, FIIs take back some money from the country? What will happen? How a country manages that. Now, after discussing these operational aspects, another very pertinent thing is stability. How to ensure financial stability in the market. So suppose there is lack of financial stability. What will government do? How to manage that? How foreign exchange is fixed? How to regulate that? What are the different policies of government regarding that? Excuse me. Now in this block, we have also talked about a very important aspect of non-performing assets. As you might have studied, as you might have read in newspapers, that non-performing assets is a very big problem for an economy. It is a big burden for any commercial bank, and RBI has taken various measures to reduce non-performing assets. Now, in this particular unit, not only we are going to discuss about how non-performing assets are identified, but we have also discussed about what is RBI doing recently to reduce the number of NPAs in the country. In this particular unit, we have also talked about foreign exchange stability and the related issues. As you are already aware, in the light of foreign instability, in the light of geopolitics instability, it is very important to have right policies for managing foreign exchange. So this unit will give you an overview of foreign exchange stability. We are also going to talk about how crises in one economy have a ripple down effect on other economies. What will India do? What are the policies that India have in case of such crisis? So in this particular block of financial stability, we are going to discuss about different aspects for it, where we not only talk about early signs for all these, we are also talking about preventive measures that government, central bank takes to reduce such problems. Now, last unit in this block is very interesting. It is very different from what you have studied in past 28 units. This unit will give you a peek into a parallel field called behavioral finance. Behavioral finance is a parallel field which believes that traditional financial theories that you are going to study in 28 units might not explain how stock market behaves. It may also not be able to explain how investors take decisions. It is also not going to explain that investors, why are they not always rational. Like you might have seen that many times when you are taking a decision, it is not always the best decision. Sometimes we ignore a lot of aspects and we invest maybe because of our mood, maybe because of our prejudices, maybe because of our different biases. So this unit on behavioral finance is going to give you a sneak peek into different aspects that may affect an investor besides return and risk. These factors are psychological also, emotional also, cognitive also. So this unit will give you an absolutely different idea from what you have studied overall in first 28 units. Just to summarize, this whole course, Money, Financial Institutions and Markets, is going to be very interesting if you try to understand it from an aspect where it is an extension of macroeconomics that you have already studied, and how it helps you to understand the whole world of financial markets, the whole world of financial systems in a better way. That's it for this session. In our next session, we are going to take up some technical aspects from the course and try to clear that for you. Thank you.
मैं बहुत ज़्यादा शुक्रगुज़ार हूँ इग्नू के लिए, क्योंकि ये एक ऐसी यूनिवर्सिटी